Hello out there to all the traders friend. Welcome to this special preview of pre-sign of market crash, a huge profit awaits you conducted here by DAR Wong from pwforex.com. Alright, before we start off, as usual, we'll go through a small risk disclosure and disclaimer that all the investment and trading activities related to the financial market and instruments do carry risk. So please exercise your caution and discretion while you listen to us and eventually get into the market. All right, first of all, the main title here reads that why do we foresee a market crash in 2016? All right, this is a very big heading here. And as far back as sometime November last year in 2015, I spoke in a lot of conferences and financial seminars over a couple of countries in the ASEAN regions, all right, and especially in the Master of Wealth seminar conducted in the Resort World Sentosa on the end of November 2015. I actually did spoke in front of almost 3,000 people, all right, to be cautioned and also to exercise a lot of risk management in the coming year 2016 because of a possible market crash which will be coming forward as early as the first quarter of this year. All right, then again, what do we see in the market crash in 2016? All right, there are many reasons out there, and of course, to cover a few more important ones. All right, first of all, China's slowdown has actually caused a lot of jeopardy to the economic growth in the region from ASEAN going out to the world. All right, in fact, in the last quarter of 2015, China actually slowed down with a GDP of 6.9%, and that is at the lowest record of the last 25 years. All right, and on the second point here, slump in the commodity prices, as you can see, starting from almost like 2 years back, oil prices and all the food prices has been dropping down. All right, and currently, if you look at a lot of the commodity prices like sugar, cocoa, coffee, rice, rubber. All right, some has actually began to rebound, but a lot of them are actually falling to the bottoms of 2008 or even creating new low. All right, even like gold and silver has dropped down almost 40% and 70% from where it came up from in 2008, but now beginning to rebound. The third reason is low inflation rate worldwide. All right, and inflation growth has been miserably slow and unable to stimulate the recovery of the global slowdown. And U.S. has been having an inflation of 0.73%, while China is having 1.8%, and Eurozone over 19 countries are struggling at 0.14%, and last but not least, Japan, as also one of the top four largest economy in the world, is suffering from 0.19%. All right, besides China, which is still close to 2%, all right, the other major economies are actually far too behind 2% inflation, which actually deter them from getting back onto the right track of economic recovery. All right, out of these three reasons, the fourth is, of course, negative interest rates, which Switzerland has been switching to negative interest rates for a while. All right, European Central Bank has actually started to move their deposit bank rates last year to negative regions. And on the 29th of January this year, 2016, Japan also announced the deposit bank rates to move down to 0.1%. And negative interest rates are supposed to stimulate market growth, but in fact, this is a sign of telling the whole world that the economic recovery is slow and shrinking. All right, and a lot of the GDP are not able to withstand the impact of economic crisis, which may not be good enough to see a U-turn or a W reversal or V reversal this year. All right, and of course, on the last headings here, all right, resurging debt crisis, which is very scary. Um, what we actually saw on the first week of January after all the worldwide traders came back from the long holiday seasons, all right, the year actually started off with a big topple in the equity prices worldwide, basically due to the resurgence of debt crisis. All right. Currently, until now, the Deutsche Bank has reported that the CDS, or we call the credit default swap instrument underwritten by Deutsche Bank, has actually moved up to a total of 64 trillion US dollars, and that is, wow, almost like two times the Lehman Brothers debt, which actually caused the whole world to collapse through a subprime crisis in the year 2008. But besides Deutsche Bank, we are still worried. All right, we are quite worrisome of Barclays Bank and also Standard Chartered, which both of them just have equally high debt crisis in the CDS now issued out to the whole world. So, well, this year we are seeing a very big danger, all right, in the debt crisis that may actually be coming back to haunt the whole world collapse. All right, while we just mentioned Deutsche, Barclays, and Standard Chartered, you would have realized that these three banks are actually European banks, which this year, most likely, if the crisis is to be triggered, all right, it may come from the Eurozone region. All right. If you still think that the above five reasons are not enough, let's take a look at number six and number seven. All right. Global economic shrinkage, and Moody just cut a GDP outlook for many emerging countries, especially Saudi, Russia, Brazil, and South Africa, on average, are moving down from 3% down to 2.5%. Well, if we look at these four countries, Saudi, Russia, Brazil, and South Africa, basically these are the commodity producing countries, which include the production of oil. All right, this year, once the emerging markets slow down, which they take up a lot of a big portion of the world global economic size. All right, and that is why we are not looking at a very big optimism in the market portfolio for 21/6. All right, last but not least, the OPEC, which represents the oil producing countries, have been struggling for oil recovery. All right, as far as from 120 US dollars 2 years ago, that it went down to $60, which is half the value. All right, at $60, that is also the production cost of all the oil producers like ExxonMobil, Dutch Shells. But now, out of $60, it went down again to $30, which is half the size of the previous top. All right, and how far can the oil prices be moving down, or are we going to see a V rebound or a W sign rebound this year? It's going to be very crucial, all right, to set up a new portfolio, which we foresee that the commodities may take a turn this year. All right, so out of all the 7 reasons that we just mentioned earlier, all right, do you think these are the reasons good enough to cause a crisis this year? And some people also ask me, so say, DAR Wong, what happens if there is no crash, and what will happen? All right, in our opinions, all these 7 reasons are good enough to implode into a economic crisis this year, because all the essential reasons and triggers are actually more dangerous than what we saw in the year 2008. But even though if there's no crash or no economic crisis this year, but well, we feel that it's not going to do a lot of good, because even though there's no crash, we have seen the equity prices and also a lot major economic slowdown throughout the whole year. All right, after talking about all this, let's take a look at the next slide. What actually caused the crisis year and the economic plunge since 1980, which till now is about 35 years? All right, very quickly, if you look into this chart, all right, this is what we actually have realized, that over the past years of the crisis, before the global market melted down every time, it was actually forewarned and also being led by a plunge in the crude oil prices, such as in 1980s, 1987 to 89, and then 1990 and 1997, the ASEAN crisis, and year 2001, which is the Nasdaq bubble burst, and here in the year of 2007-08, all right, which followed by the recent one that the market actually plunged down from 115 US dollar per barrel in the WTI crude prices down to the current 35 or even now below $30. All right, another thing which is very coincidental is that if you look at the decline of 1984, 1992, year 2000, 2008, and all these years of the WTI crude prices moving down, which created a crisis year, actually coincided with the U.S. election cycle year. All right, so this year 21/6, we have another additional reason to believe that the market will slow down or eventually may move into a crisis if it works well with this coincidental theory that was founded by us. Then taking a look at the Dow Jones, or we call it DJIA, it stands for Dow Jones Industrial Average Index since year 2000. All right, this is also another very miraculous cycle that happened over every 4 years in the year 2000, 2004, 2008, 2012, and the current year of 2016. All right, on the alternate cycle, we can see here, all right, that we see one cycle which is moving down, moving up, moving down, moving up, and naturally this year we are expecting Dow Jones to move lower, all right, then rather it will go up. All right, this chart was prepared in early January, which we were doing that for the workshop which we first conducted in Singapore on the 30th of January, all right, which the Dow Jones was still trading above 17,000. But of course, if you look at now, we all know that Dow Jones is now trading near to the levels of 16,000 or even lower. All right, so this is a good gauge that our forecast technique is pretty accurate. All right, and people who have followed us would have easily made 10 to 20% return. All right, by learning how to short Dow Jones for this year 21/6. All right, this year alone, we foresee this is going to be a big short year. All right, as you would have gone through in the year 2008 or 2001 or even 1997. All right, so please do not miss out. This is very important because all right, if you are able to capture a down move, all right, in all the equity prices and the important indexes and commodity, you will be able to capture a V rebound as well in the year 21/6 or moving to 21/7. All right, next thing, let's take a look at the dollar yen chart, which is a monthly chart outlook for 21/6. All right, this is a monthly chart, as you can see here. Subprime crisis that came in the year 2007. Dollar yen was trading at a high of 124. All right, it actually creates a double top in the year 21/6. All right, when the market was hovering at the top 124 again. So this round we are looking at dollar yen to move down. All right, in fact it has gone down to the region of 113, 114. All right, from where the chart shows here. That was taken from the early January of 21/6, and we are looking at dollar yen to move down to a first target of 109.5, which you may be seeing this sometime in May or June this year, all right, or even earlier. All right, but eventually by end of this year, we're expecting the dollar yen to move down a 50% correction at the region of 100.5. All right, for this special preview. All right, you're actually seeing a lot of chart points and also target prediction of the market prices that we are putting up here. But at the end of the day, we still believe how you actually find your entry, control, or risk, and how you're going to do a correlation on the market and putting them together to set up a new portfolio is more important than just knowing one or two factors here. All right, so do you want to know about the repetition of pre-signs the market crash? All right, you may say yes, you may say no, But at the end of the day, even if you know it, so what if you do know all the signs? And secondly, what are you going to do? All right, that's very important because in this workshop that we're going to cover in Singapore and Malaysia, all right, um, the instrument that we will cover on finding a very big slump this year and also moving up to capture on the subsequent profitable trend does not only just cover one or two, but basically we cover on Dow Jones, all right, on the commodities like crude oil, gold, silver, or even rubber, and the FX we actually cover on dollar yen, New Zealand yen, on euro currencies, on dollar index, all right, and many more. So this is a very valuable one-day workshop with a lot of impact that's going to bring you to a new horizon and elevate your trading awareness to a higher level of profitability. All right, last but not least, all right, this slide is projecting a mystery bonus which we will cover at the end of the workshop, which definitely is something that you will love it and you will not miss. All right, how you may actually outrun the market profits by conventional range extension. All right, this is what we call the alpha profits, and in fact, if we are looking at certain commodities that's going to make an upturn this year, we have the room and also the capability to share with you how to create 2 times or 3 times or many more times than the conventional market range of the underlying instrument. All right, question 1, for example, if there's an instrument out there that will never devalue to 0 but used to cost $1 per piece, will you buy it now if the market of this instrument has devalued 80%, which costs 20 cents now? Definitely, I think it's worth buying. All right, it's just as equivalent to a house used to be worth $1 million and now selling for $200,000. I think this is something which not many trainers in the market will highlight to you and share with you on the power of market multiplication upon price recovery. And looking at question 2 here, which is more interesting. All right, if there's an instrument that is used daily on universal basis by everyone but used to cost $1, would you buy it now if it is worth only just 2 cents? All right, and this is very unbelievable. Well, the only thing that I can entice you to find out more is come to our workshop and find out for yourself, because this workshop I want to remind all of you and also to emphasize again, it is only applicable and very useful with a lot of impact, which is going to be conducted only for this year 21/6, because this is the year of crisis and a big meltdown. All right, if you miss this workshop and not able to capture a big profitable trend and to set up a new portfolio for yourself, all right, all these may not be applicable again in the year 21/7, and you may actually have missed out all the big profit run. So don't miss out 21/6 to be the biggest year in your life. All right, last but not least, and what's the takeaway from our workshop, which is the pre-sign of market crash, a huge profit awaits you. All right, throughout the whole day, we're going to cover this special topic. First of all, revision of the past market crash since 1980, and you will clearly see what actually caused the market meltdown, and at that time, what are the most important instruments that actually melt the fastest and recover the fastest after the meltdown, and followed by the comparison of fundamentals versus statistics. All right, these are the facts and essential data to prove to you that our workshop contents are based on very good historical facts, which has got very high winning probability, and followed by the repetition of pre-sign to crash. All right, so you're going to learn a set of repetition which is forming this year and help you to familiarize with the market on how to identify potential signs of market move down. All right, then on the 4th topic, handle market positions versus trading fund. All right, how to reduce your risk by planning your trading game plan cautiously and in a interesting way. All right, power wave trading versus timely exit. All right, that's very important in order to understand the timing and the price parameters in order to segregate your risk and able to profit on higher probability. All right, and the second last topic here, fund protection and trading orientation. You'll be taught to go through the trading platforms and the free charting software on how to use them efficiently. All right, and of course, on the very last topic, free mystery bonus, which are the two questions that I threw out to you earlier. Okay, to register for 21/6 class, basically in Singapore, you can make a contact to Miss Jasmine Tan at this number and also to email her. Alright, the next immediate Singapore class will be held on the 9th of April. Alright, I repeat, 9th of April 21/6, and subsequently probably we're going to have 2 or 3 more classes in Singapore until October before we actually do a closure. And from those parties that come in from Malaysia, alright, you can contact Mr. J.C. Lee at his contact number 016-280-2227, alright, and with this email. Alright, the average estimate prices for this one-day workshop is really affordable. Alright, do not miss it. It's going to cost somewhere in the range of US dollars 350 to 500 for the one day, including on all the handouts and 3 meals to make you satisfied and in a very comfortable and conducive environment. All right, 350 to 500 US dollars. Well, in exchange for a very big potential profitability coming your way in 21/6 and going out to the next 3 years. All right, of course, the range will give you even at a better price down to 350 or even close to 400 if you happen to be early bird and come to us fast. And for Malaysia, the immediate next class will be held on the 27th February. Okay, I repeat, 27th February in the year 21/6. All right, 27th February, and Singapore will be held on the 9th of April. And subsequently, we are looking at another 3 more classes in Singapore and 3 more classes in Malaysia before we do a closure at the end of the year 21/6. All right, so do not miss out this very interesting and exciting one-day class, all right, to teach you how to reset your portfolio, how to identify market crash and a very big short trend in order for you to profit this year. All right, this is DAR Wong here from pwforex.com. Thank you for staying with us, and I hope this preview has been interesting and it has actually triggered your awareness for coming forward to learn from us and find out more about how you can profit from the market. Thank you very much. Bye-bye.